Strategy you should for successful price action trading. Complete guide. Learning the price action trading strategy are the pivotal requirements for the successful trading in financial markets. So, we have compiled the guidelines for our worthy readers, whether you are a long-term or a short-term trader. These strategies are simplest yet very strong and powerful tool for acquiring a distinctive place in the financial markets. Arguably, you should pay keen attention to learning this strategy because you are going to get the edge in the market with the help of these strategies. As we all are aware of the fact that price is considered trading indicators across the globe. Moreover, price controls monitors the trading decisions and move into the market. So, reading and learning the price action trading is worth of your precious time. What does price action mean? Simply, simply illustrated, price action is the price's response to certain level and types of support and resistance. This analysis includes the study of historical movements of the price and predicting the behavior of the price in response to the past support and resistance factor. So, successful traders are those who analyze and predict the price behavior with precision to take benefit out of analysis. Most useful and important indicator for price action is price bars, which include open and closing price, highest and lowest price level of the certain period of time. Precision is the key of success. It is worthy mentioning that analysis of the price action with taking all available tiny details into consideration is the key success. If we explain in more simple words, price action is in fact the study of the behaviors and responses of all buyers and sellers into a certain market for a specific product. So we have a promising objective of the enabling our readers to consider all this detail while analyzing the price action. Consequently, you will be able to get a unique edge into the market while trading for a successful specific product or service. By using price action determine a market trade. One of the most important aspects of learning to trade with a PA, the first is to learn how to identify trading market compared to the stable market. Trading with the trends is probably the greatest way to trade, and you have to learn what to do if you want to make serious money as a trader. We consider a market to be an advanced distinction if it is building higher and higher and lower low. Market secrets. How the market moves. The argument is markets are always in changing phase. You will realize it by now. It can be an uptrend, downtrend, range, low volatility, high volatility. But if you take a step back and look at the bigger picture, you will realize the market trend is in 1 out of 4. Accumulate to advance distribution, the following phase. I will explain. 1. The accumulation phase. The accumulation phase occurs after the price have fallen, and the market seems to be on the decline. Example given as lower price lower, followed by the long period of consolidation. Accumulate phase. Here are some things that look for. Occurs after last 5 months or more of the reduction. It looks like a range marked with a clear welfare support and resistance area. 2000-day moving average flat. The price fluctuates around the 200-day moving average. To advanced phase. The advanced phase is the advanced trade with a high altitude and lows and a chain of command. Example given as this is the breakout of the accumulation phase and advancing phase. Here are some things I'll look for. The accumulation phase occurs after the price has run out of resistance. Series of highs and lows. Above the 200-day, the price is moving average. The 200-day moving average is pointing to an altitude. No market grows forever. It eventually become a tired, and from there it enters phase 3. Distribution phase. The distribution phase takes place after the price increases and seems that there is a limit to the increase. Here are some things to look for. Occur after price increase of the last 5 months or more 1 daily time frame, and this seems to be a clear boundary between support and resistance. The 200-day moving average is the flat. The price bounces back and forth around the 200-day moving average. At that point, the market is still equilibrium between buyer and sellers. However, the tide turns if the price falls below the support, and this is where we enter the final phase. The final phase, the falling phase. The falling phase is the high and low with the low and higher series. Break out of distribution phase and 200 phase MA, pointing lower. In the distribution phase, the price is out of support. You see a series and lows. The price is moving average before the 200-day. The 200 moving average is starting to get low. Now you might thinking, main purpose of 4 phases of market trend. Here's the thing. If you can identify the current state of the market, then you can adopt the appropriate trade strategy to trade it. Here's how. If the market is booming, you want to be a buyer, not a seller. That means you can buy break out of the fallbacks. If the market is in a split phase, you know that if the price fall below the support, there is a good chance. This means you can search of support to reduce the error or wait for the errors to occur. Then sell on the fallback. Now that we understand the 4 steps of the market, and you will know which price action trading strategies to use in the market situation, and you will never be lost again. By using price action pattern, identify trending and consolidating markets. As we discussed earlier, the PA, or price action trading analysis, is an analysis of the price movements of the market over time. From our analysis of the price movements, we can determine the basic directional biases and trend of the market. Or if this is no trend in the market, it is called stable. One can determine whether the market is trading or stabilized just by analyzing it. PA. We'll look at how to determine the market trend of above. To determine if the market is stabilizing, we only look for the absence of a high, low, or low, high, low patterns. Notice in the chart below how the steady price action is good between the horizontal support and resistance level and is not making high, low, and low, low. But going in the way is instead. Evaluation for some of the common price action patterns. Doubtly, price action patterns are very helpful tool for the technical analysis for the market. However, some of the traders are seriously concerned with authenticity of these price action patterns and question the reliability of these patterns. Good thing is that there are a number of the ways to understand the present structure of the market, and we can look up trading opportunities into the market. We have tested and analyzed the data of 20,000 patterns and collected the data of more than 10 years and accumulated the statistics. Price action pattern will only considered and after successful completion. So we have laid down the requirements for the completed pattern against every single case herein below. Okay, I will continue to take a video next video. Stay tuned.